Hello, everyone, and so welcome to our lesson on understanding and analyzing sales reports. What are sales reports? We're going to talk about that, but really the one thing to remember about a sales report is it is a health report. It's a report card of your business. So let's go ahead and get started. So what is a sales report? Well, basically, a sales report, it is a document that summarizes your business's sales activity over a specific period. Again, as I mentioned, think of it as your health report card. Okay, how is your business doing? Sales reports help business owners answer critical questions like, are we selling more than we did before? What products are the most popular? What are the ones that are selling the most? And probably the most important question that you're all wondering about is, are we making a profit, right? That's the big one. Are we making a profit? But are we selling more? What products are most popular? Are we making a profit? So let's look at kind of a real world scenario, okay? So I want you to meet Marco, okay? Marco is a food truck entrepreneur. He sells tacos, okay? Tacos, tacos, tacos. So Marco wants to know if his business is doing well. So in order to do that, he needs to create a sales report so that he can see the numbers. So as Marco is making his sales, he's doing his business every day every day after day. He's tracking every sales he makes on his cash register, whether it's through his iPad, through a register, whatever. So there's a couple different things he can look at. In this case, in this example, we're going to look at the sales period. That is Friday, October 20th. Okay. So he notices that on this particular sales period, on this particular day, he sells 100 beef tacos. He sells 150 chicken tacos. He sells 50 veggie tacos, and he sells 75 drinks. Okay. Okay. Well, that's good to know. Okay. But then what's the next step with that? Okay. Well, he needs to determine his sales revenue. Okay. This is the big number. Okay. Your sales revenue is the total amount of money earned from all of your sales. And the way you calculate it is you take the price of each item times the number of items sold. So let's go back to our example from October the 20th, Friday, October the 20th. Okay. So in Marco's example, okay, we know he sold 100 tacos. Well, he sells his tacos for $3 each. Okay, so $3 times 100, that's $300. Hey, pretty cool. Good, nice to know. Okay, we do the same thing with the chicken tacos. Chicken tacos he sells for $2.50 and he sold 150 of them, so he made a total of $375. His veggie tacos he sells also for $2.50, but he only sold 50 of those, so that's your total of $125. Okay, and then his drinks he sells for $1.50. He sold 75 of those, so that's $112.50. So if we add these all up, right, plus, 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 we want to add them all up, we get our total sales revenue of 300 plus 375 plus 125 plus 112.50. That's a total of $912.50. That's how much his sales revenue was in that day. Perfect. Great. Cool. So much great information to know. But we need to take into account something that is called cost of goods sold. Now, typically, when we talk about numbers or we talk about business terms, this is something that's known as COGS. Okay, cost of goods sold. Okay, COGS. Remember that COGS. Okay. COGS, your cost of goods sold, this is the direct cost of producing your goods. Okay, for example, the ingredients for the tacos, the cups for the drinks, so on. The way you calculate it is you look at the cost of each item, times the number of items sold. It's very similar to your sales revenue. The difference is here. In cost of goods sold, you're looking at the cost. In your sales revenue, you're looking at the price of each item. Okay, so here's our example for Marcos. Okay, so his beef tacos, his COGS, his cost of goods sold is $1 per taco. Okay, so again, he had $100 in sales, right? So he sold 100 tacos at $1 a piece. That's $100. We do the same thing with the chicken tacos. 75 cents times 150, we get 112.50. Veggie tacos cost him a 50. He sold 50, so that's $25. And then of course the drinks, it cost him 25 cents per drink at 75 drinks. That's $18.75. So again, let's add this all up. Plus, okay? Doo-doo. So our total COGS is the 100 plus the 112.50 plus the 25 plus the 18.75 equals 256.25. All right, let's get on to the next concept. Okay, gross profit. This is the big one, right? This is the one we really want to know. This is what we want to understand. Now, I do want to make a point that there is a difference between revenue and profit. Okay, revenue is your bottom line. That's how much you sold. Okay, but in order to get your gross profit, you have to subtract your COGS from your sales revenue. Okay, so your gross profit is your sales revenue minus, okay, your COGS. Sales revenue minus your COGS, okay, your cost of goods sold. That's what determines your gross profit. So here we're talking about Marco's Taco Shop or Taco Truck, right? So we know that his sales revenue was $912.50. Okay, great, perfect, great. But it cost him $256.25. That's his COGS. Remember COGS, cost of goods sold. Okay, so his actual gross profit was $656.25. Now, I've never run a food truck. I don't know. But to have a gross profit of $656.25 in one day seems pretty good. Okay. But that's not the only thing that you can look at when it comes to your sales reports. So here's some other key elements. You can look at your sales by product. This is your breakdown of how much of each specific item was sold. It's important because it helps you identify your best sellers and your slow movers. So in Marco's example, okay, the most he sold was his chicken tacos. That's his highest. His lowest seller was his veggie tacos. All right, so his chicken tacos seem to be his most popular, and his veggie tacos, maybe not so much. Okay. We can also look at your sales by the time period. Okay, this shows trends over days, weeks, months. Okay, it helps your business plan for those busy times and your slow times. So, for example, in Marco's example, he notices that his Friday sales are usually his highest. He can look at Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, whatever. Okay, but he determines that his Fridays are when he makes the most sales. That's when his sales revenue is the highest. He also can see, because he's looking at the time period, he can also see that he sells the most between 12 and 2. That's his lunch rush. Okay, that's when he gets the most business. Okay, so his busiest day is Friday, and his busiest time is 12 to 2 during the lunch rush. Now, the sales by product or the sales by time period, those are only two key elements on your sales report that you can look at. There are so many other elements and key metrics that you can look at depending on what you want to know. All right. You can look at things like average transaction. There's just so many. Okay. So now that we have the sales report, we want to analyze the sales report. This is the so what? Okay, I have all these numbers. Great. So what? All right. This is your takeaway. Simply listing the numbers is not enough. You have to analyze those numbers so you can make smart business decisions. So let's again look at Marco's Taco Truck. Okay. So he compares his periods, right? He compared his Friday sales of this week to last week's sales on Friday. Okay. Last week's sales, last Friday, he only sold $850. That was his revenue. Okay. But this week on Friday, his revenue was $912.50. That's an increase. That's good. An increase is always good. Okay. And again, he can also look at finding his best sellers. Again, he's found out that his chicken tacos are the ones that are the most popular. And at the same time, he can identify those weak spots, those things that aren't selling too much, like his veggie tacos. His veggie tacos have the lowest sales. So here's where making decisions can come in based on what you're seeing, the analyzing that you're doing from those numbers. Okay, so based on his analysis, Marco makes some decisions. He decides that he's going to order more chicken, okay, because to make sure that he doesn't run out, since that's his biggest seller. He's also creates a combo special, veggie tacos and drinks. He's going to try that next week to see if it can boost the sales. So combining those couple of items, see if he can boost the sales on it. And he might also want to consider having an extra person during that 12 to 2 period when he's the busiest. So he's not trying to do it all himself. And by doing that, he's also giving better customer service so his customers aren't waiting so long for their food. So really, when it comes down to it, the takeaway on analyzing a sales report, it is that it is more than just a list of numbers. Your sales report is a powerful tool that helps tell the story of your business's performance, how you're doing, and it helps you make smarter choices so that your company can grow. Right? So that is our lesson today on understanding and analyzing sales reports.